Oh boy, here we go again. Big media's favorite horror movie, Stock Market Crash 5, Electric Boogaloo. Drumroll please and cue the dramatic music. The panicked news anchors, the experts who totally saw this coming 5 years ago. After it happened, it's like clockwork. The market dips, the headlines scream, and suddenly your Aunt Karen is texting you, "Should I sell everything and buy gold?" No, Karen, no, you should not. Because guess who is rubbing their hands together like a cartoon villain every single time regular people panic sell? Is the same Wall Street ghouls who just happen to have billions sitting around to buy up all of those cheap stocks right after you dumped it in a frenzy. Let's talk about the pandemic. The greatest wealth transfer since Robin Hood, except in reverse. If you're watching this video, I assume you're old enough to remember March 2020. That's when the stocks tanked and the world was ending, and CNBC was basically broadcasting from a bunker. Meanwhile, the big money players were scooping up stocks like they were half off TVs on a Black Friday. Fast forward just a single year, and oh look, the market's back at all-time highs. And guess who is richer? Not the people who sold in terror. Oh no. It's the same hedge fund managers who probably high-fived each other over caviar while the rest of us stress ate cereal at 3 a.m. Because the media's whole business model is simple. It's very, very simple. It scares you into clicking, market crash imminent, recession coming next week. Spoiler, it didn't. They don't make money by telling you to relax and keep investing and dollar cost averaging. No, because that is boring. They make money making you feel like you're one headline away from financial ruin. And first of all, who actually owns these fear factories? Oh, it's just the same institutions that profit when you make emotional panic decisions. It's almost like they want you to be bad at investing. That's weird, right? So here is the big secret. In the entire history of the US stock market, it has always gone back up. Not in a straight line. No, that would be too easy. It's more like a drunk guy stumbling uphill. But over time, he sobers up and he gets back up. The S&P 500 has survived wars, recessions, disco, and is still here. So unless you think capitalism itself is going extinct, in which case money is the least of your worries, the smart move is to just keep buying. Dollar cost averaging isn't sexy. It's not a get-rich-quick scheme either. In fact, it's a financial equivalent of eating your vegetables. But the people who get rich, they're not the ones timing the market. They are the ones who ignore the circus and let time do its work for them. So next time you see some breathless headline about the biggest crash ever, just have a good laugh. Pour yourself a drink. Maybe buy a few more shares while everyone else is losing their minds. Because the game is rigged, just not in the way you think. The real winners aren't the day traders or the doom porn peddlers. They are people who sit back, stay patient, and let the suckers panic sell their future wealth to the guys in suits. Or hoodies. So don't be that sucker. Be the guy who buys the dip and then forgets about it until it's worth way more. The end.